Welcome to the Business Finance Matters podcast. Over the next 15 minutes, we're going to tackle some of the topics that we get asked about on a regular basis so you business owners can get a better understanding of what it is that you're probably dealing with on a day-to-day basis. Let's get on with it.
David.
Hello.
How are we?
Really good, surprisingly.
I was going to say, all things considered, should we not revisit?
Let's not talk about last night.
Should we move on?
Go for it.
So this episode, what we're going to have a chat, and I think it's a chat, not an interview, about the relationship between lending and home ownership. So more importantly, what are you getting at there?
Well, I think it's clear from what's coming out in certainly the data I heard the other day, which is why I mentioned it to you a few weeks ago, that home ownership, for a number of reasons, is not as it was. I mean, back in the dinosaur times when you and I were buying properties, and I bought mine when I was 24, and I remember going into what was known as the Abbey National Building Society. I had 3 copies of my pay slips, and I think that's about it. And I had a 5% deposit. But actually, I didn't have a 5% deposit. The Building Society were then, I think, offering 110% in some cases, or 100%.
It got to that
The point being is the process of getting on the property ladder back in the dinosaur days was very straightforward, very easy. But it's clear, for whatever reason, I still can't get my head into it personally, but youngsters trying to get on that property ladder now is a real challenge.
Okay, so let's then move on from that opening. Why is that then, or what's the relevance of home ownership when it comes to lending to businesses?
Well, why it pricked my ears up is that the lenders that are out there at the moment, and as we know, there are many of them, and I'm not quite sure on the numbers, so don't quote me on this, but I think it'd be fair to say that the majority of them, if we're looking at pure lending, as in loans, and not any type of secured lending like asset finance, lenders prefer or are asking for and will not necessarily take an application unless the business owners are homeowners.
Yeah, I mean, I remember going back to my early career, and I was taught, trained, whatever. I think there's fundamentally 2 reasons that lenders do that. One is they felt it was less likely that the potential borrower would do a moonlight flit. And secondly, I think they took comfort from the fact that there was some almost security behind that transaction. I mean, we did a session. I remember we did an episode on guarantees. Yeah. I mean, and enforcing guarantees and how that was a relatively low number, but there still seems, I get the feeling there still seems to be this attitude of, well, if they don't own their own home, we're not interested. And I find that a bit strange.
Well, I get the reason for it, because homeowners are less likely to do a runner, for want of a better word, in the event of a default. I mean, tenants, as we know, can quite quickly remove themselves from the property, whereas you're a homeowner, it's highly unlikely that you're going to be moving anywhere quickly. Plus, the home ownership gives some stability for the same reason. And I think, as you'll probably be able to provide a bit more background to, that the personal guarantee side, which most lenders still would like to have as part of their security package, as a homeowner, in theory, there is equity in a home. Therefore, it gives some kind of personal net worth. In the unlikely event, as you said, we've spoken about on previous podcasts, there is a need to action a personal guarantee through a default in whatever finance policy.
Yeah, I mean, look, I remember, as you probably do, goes back to, I think, to the era during Thatcher's government, and if you recall, what was happening there was the thing called a preemption, and a preemption was that right that local authorities gave to tenants that they had in their properties first refusal on buying it. And of course, a lot of people thought, happy days, here we go. And many of those people did buy their council property, and many still remain in it. But
so that was around what?
That would have been 80s. That would have been
early
in the
80s.
Early mid 80s, because we got involved. That's when I came into the finance market around that time, and I remember it being. Yeah. But I think prior to then, certainly, after the war and all the rest of it, home ownership was really not a thing. It was, it was something that, your man in the street didn't do, couldn't afford to do,
The UK was, in terms of the European you can compare to the European the data that we get, was a clear leader in home ownership.
Yeah,
for many years, and now it's not.
I think
so. If you look at the data now, I mean, Germany, for example, as you know, I've got some German roots. They still have. I think it's about 50% of the population are homeowners. But certainly there's no desire. I think that's the right word to home. But the UK figures are almost identical. I don't know exact numbers. Might have had it written down here somewhere, but it's somewhere around 50%-ish of the population are now homeowners. So the trend is going in the other direction. And the reason that we're doing this podcast is that obviously that will come under some of the business owners that we work with. Their relationship with, well, are they a tenant or are they a homeowner? That will have potentially an effect on an application we might make because of the criteria that the lender is asking for.
Yeah, and I mean, that's interesting. I mean, I heard on the news literally this morning coming into the studio that you said you went for your first mortgage at 24. Well, apparently the average age for first mortgage now is 34.
34, 35,
34, 35. But coming back to the lending market, I don't see, and I'm no, great visionary of what's coming, but I don't think that's going to change much. If anything, I think the renting or non-ownership brigade will increase. Now, that lender's going to have to think about that, because if they are not prepared to redraft how they lend and what they look for, then their business is not going to happen, is it?
And this is again why we're doing this podcast. What do we see the effect being in the future based on the stats we have at the moment? I mean, we could have another podcast about why isn't it easier for people to get on the property ladder? If you think about how much rent some people are paying in equivalent to what they're paying for a mortgage, if you look at property has typically over God knows how many years, always moved in an upward direction. Why banks aren't seeing that there is still a low risk to having home ownership, bearing in mind that most of the people that are renting will probably save themselves a few quid a month because the mortgage that they'll be paying will be far lower. And of course, they're getting some value in the house as well.
Maybe, but I think, and I think you've begun to see it with your lads, but certainly with my children. Well, I say children, they're approaching 30 now. Surprise. They're not really interested in ownership at the moment, because it's a bit of a tie. It's you and I, go to college if you were lucky after school, go and get yourself a job, find yourself, if you're lucky, a decent partner or someone that will put up with you.
That was a challenge. But I did find something.
And then what's the next thing you do? You go and buy a house, and then the mortgage, and there you are for what was then 25, 30 years paying the mortgage off.
I think what you're alluding to is the way that most people evolve. The days that we were buying property is not the days now. Hence why this podcast is all about the number of business owners that are now homeowners is less, and I think it will continue to get less over the few years.
Agree.
And therefore, who, if currently, will change their attitude towards lending to those directors, business owners, business owners that aren't homeowners? Or is there a space, as we keep on saying, for more lenders to come into this market having a different attitude to home ownership?
I think you're right. I think the latter's going to prevail. I think there will be a few that currently insist on home ownership that might decide a small percentage of their lending portfolio they'll lend to tenants. But I think what's going to happen, it's such a fundamental shift for lenders to react to this. I think new lenders will come in and look at a different way of structuring a transaction.
And let's hope so, because that's the way the market is moving.
It needs to follow.
And does that mean that more businesses in the future will struggle to get access to finance because they're not homeowners?
I think in the short term, and we got members in the guild, I'm thinking of one at the moment who's always banging on about this point. He finds it very, very difficult in what he does, because he's quite we've had him on a previous podcast. I'm talking about Ian Woodley. And his sector in hospitality, those guys and girls are typically 50% of the people he deals with don't own their property.
Well, I'm just looking at a bit of stats here. It does say that the UK is we're sitting amongst the lowest in Europe for home ownership.
Right.
So again, in terms of the business, as a country, as a nation, wanting to get businesses moving forward, and funding is an important part of that. If they're not homeowners, what's going to happen?
We've got to be careful also, though. We can't talk about all lending. I mean, you'd like to think if you're financing an asset, what we in the market call asset finance.
Something that's secured against.
That's a bit of a no-brainer, isn't it, to understand what that is.
Absolutely.
So if you're buying a truck or a printing press or whatever it may be, printing press, squirrel jam or whatever it is that you want, you'd like to think that the lender's looking at that as a form of security, should things go south. But even some lenders will want that and personal guarantees and home ownership, which I think is going to be a challenge over the next few years.
It would be interesting to hear from an existing lender who does ask that the business owners are homeowners, otherwise they won't accept any application for finance, to see what their attitude is and whether they think moving forward they could see their criteria changing to accommodate what clearly is happening in the marketplace now. Is home ownership is going in the opposite direction.
I think where it's really heightened, and Wooders would probably back me up on this, it's the newer and new start businesses that struggle with this. If you've got an established business trading well, profitably, 5, 10, 15 years, a lender will take more comfort in that and perhaps might be inclined to relax there. Might be inclined. But if you got a new start with no track record and no real, you're basically your highest risk.
And let's face it, what age groups typically are new business owners?
There you go.
Mid-30s?
There you go. There you go.
And the last thing they're going to want to be doing is looking at property if they want to be using their money to invest in their business.
Well, this is another thing. I mean, I think this is quite a key subject. The fact is, there are lenders out there.
Yes, there are.
They're not the majority. They are in the minority. There are lenders out there that do not insist on the directors being home owners, but I don't know. I think it's going to be a tough few years on that front. I think it's the market, as you rightly say, the housing market is definitely going in favour of non-home ownership. I think you're right. I don't know the number, but I would imagine the majority of new start businesses are probably started by individuals under 40, maybe under 35.
You said it, mid-30s.
Mid-30s. And isn't that a coincidence? Because that's the average age that people get a mortgage. But, I just think it's going to be an interesting watch.
And for me as an intermediary, it's just another potential hurdle that we've got to get over.
Sure.
Because if lenders are insisting that they're business owners, well, that makes the whole journey that we have to take them through even harder.
Well, it's like we always say, we always advocate that potential borrowers should never, ever go direct to a lender.
Correct.
They don't know going to a lender whether their home status has any bearing. How would they know until they ask the question? And it could be a very tiring process. They have to come through someone like yourself or one of the other members in the guild.
They don't have to, but we'd highly recommend it.
Well, they should do.
They should do, yeah.
They should do because it will save them time, it will save them aggro, and it will open them up to a whole market that they know nothing about.
I agree.
I think that's a key point. So, listen, talking to the guild, we're building the membership, which is good. I've got a few more coming on board. We'll be introducing them next week to the other members. Website, bfpguild.org.
So I've been rehearsing these lines.
Okay,
so
go on then.
It's www.bfpguild.org. Is that right?
Yeah, drop the W's, mate.
Okay.
Where are you? The 1980s?
bfpguild.org.
That's it. Okay, and I tell you what, we got a really nice comment from one of our big followers the other day about how good they thought the podcast was. Blah blah blah. Robert,
yes, thanks for the comments.
Robert Taylor, if you're listening, if you're watching, you know the usual arrangement. But anyway, good to see you, mate.
Hey, my email address.
Oh yeah. Podcast at bfpguild.org. See,
Great.
straight from there, from the head, which after last night, I'm amazed I could even say it, let alone remember it.
Right. Good to speak to you, and speak to you again probably in the next...
You have to chop a few trees down this afternoon.
I'm going to do lumberjacking.
Okay.
All right, mate.
Good to see you, mate.
Bye.
Bye-bye.
Thanks for joining us on this podcast. We hope it was useful. Please share, please subscribe so we can share this content to as many business owners as we possibly can. And if there was anything we haven't covered in this particular episode, then please let us know. Drop us a line. We'll be happy to talk about it in future episodes. Thanks again.